I do not. I'm not jealous of you having to figure out the dollar trade right now, the position you're in. We've seen dollar weakness for a while.
Yep.
Last week was interesting, right? We had the president talking down the dollar over the last week or so and then kind of backing off of it, right?
We have a strong dollar policy.
Yes.
That's the one line we keep hearing.
And the way the appointment or the nomination of Kevin Warsh to head up the Fed, and the thinking is maybe more hawkish, so maybe more inclined to fight inflation, which could mean higher rates, which would be supportive of the dollar. Is what we're seeing some strength today in the dollar index a short-term trade in your view before it resorts back to some more weakness?
Absolutely. It's been quite the start of the year. You're absolutely right. It was a reversal of the debasement trade, let's say. The debasement trade has had the strongest legs in precious metals, and the second asset class after that, which has been pricing that, is FX. Bond markets and treasuries, thankfully, have been spared from that, which is why moves in treasuries have been a lot more contained. But precious metals, followed by FX, have been the largest absorber of the debasement trade, which with Kevin Warsh over Rick Reeder, you got a little bit repricing off, which is why precious metals fell and the dollar, rallied a little bit. Tactically, we do think the dollar has room to continue to strengthen a little bit. January and February tend to be very strong from a U.S. data strength seasonality. So we do think Jan-Feb, if the focus remains on U.S. data, you could see a little bit of a strength, but any such strength we think will be very temporary.
So you think the debasement trade has come and gone at this point?
It's not seen the end of it's not seen the end of its last legs. Just think about the number of Supreme Court decisions which are still pending. Kevin Warsh markets are assuming is going to be hawkish, given that he used to be in his erstwhile Fed days as Fed governor. He used to be hawkish, talk about cutting down the balance sheet, but he has now been appointed by a president who wants him to slash interest rates heavily. So we still don't know to this date if Kevin Warsh will play that hawkish profile which markets are expecting him to play, or really have to, balance the two profiles. He cannot just bite the hand which is feeding him, right? He cannot just talk about a hawkish policy right off the bat. So,
why? Well, it's interesting that you say that, because we did have the president at that dinner in Washington. I think press weren't open, but he apparently made some comments about Kevin Warsh and maybe, having to sue him or go after him. So, if we should assume Kevin Warsh is Fed chair, is he going to be one that is going to be constantly on the radar of President Trump, especially if he is more hawkish?
Unfortunately, that's the job. That's any Fed chair is going to be on the target of Trump, whoever it is, and now it's going to be Warsh. Warsh will likely be nominated. We don't think it's going to go through any problems in his nomination going through. The next big question would be, would Chair Powell then step down? Odds of Powell stepping down have increased a little bit, but that's under the same assumption that markets think that Warsh will be reasonable, going in line with data, and nothing to do with what the administration
It's almost
wants
like, does the adult in the room need to be there or the babysitter need to be there, right, to some extent?
Yeah, absolutely. And we don't even outside of this, we still are pending decisions on Lisa Cook's trial,
right,
on IEPA being legal or not, on Powell, on the renovation charges on him.
But don't you think is Powell safe as a result of Tom Tillis, Senator Tom Tillis?
That is the assumption, because a lot of senators, including him, have come out saying that we're not going to approve any nomination for Fed chair unless you get that sorted, which definitely does increase, thankfully, the odds of that being, swamped out and that basically being done and dusted. And that's why also polymarket odds of Powell stepping down as Fed chair have also, increased a little bit. But it all depends upon the timing. I think timing is very critical, but the number of cases is still many-fold, which is why we don't think that the dollar is out of the woods yet.
When you said the debasement trade's not over, is it largely because of the U.S. fiscal house, the U.S. White House creating kind of uncertainty on a geopolitical level? Is that part of it?
It's manyfold. That is definitely one big aspect. The second big aspect is that the dollar as a safe haven, that's no longer working out to be true. The dollar, in fact, has been behaving like a high beta currency. Its correlation with rates is broken. Its correlation with equities is broken. And now the global portfolio manager or the global foreign investor is now looking to invest outside the U.S. I'm not saying they're selling U.S. assets. They're not. But the marginal wallet, they're now allocating to commodities. They're now allocating to global equities outside the U.S., right, which is also weighing on the dollar. And the last thing which I think is really playing out here is that the world outside the US is holding up really well.